Hello everyone. Well, the dollar is still suffering a hangover from Friday's disastrous non-farm payrolls figure, which has made a lot of people question whether the Fed will really be able to go ahead with tapering off quantitative easing from September, as they've hinted. Personally, I think they will, so long as the August employment data is okay. The September FOMC meeting finishes on September 18th, so they'll have the August employment data by then. You got to remember, the non-farm payrolls data is volatile and is subject to revision, so I'm not sure that Friday's figure was as bad as it looks. The continuing decline in initial jobless claims makes me more confident about the outlook for employment. Meanwhile, for the FX market, our research has shown that recently the dollar tends to do better in the week following the non-farm payrolls when the data misses expectations than it does when the number beats expectations. Of course, past performance is no guarantee of future performance, and I'm stretched even to explain why this phenomenon has happened, but in my view, I think the decline in the dollar today just makes for better entry points, entry levels for long dollar positions. Now, Aussie dollar, one of the biggest losers overnight, has been recovering somewhat during today's trading as the U.S. currency has been falling against all of its G10 counterparts. I was expecting a rebound in Aussie dollar after tomorrow's RBA decision, but it appears to be coming just earlier than I expected. Nonetheless, I'm still bearish on the Aussie over the medium term from a fundamental point of view. Australian retail sales in June, which were released overnight, were disappointing. That's not only made everyone even more certain of a rate cut tomorrow, but also increased speculation about further rate cuts in the future. Australia seems to be caught in a balance sheet recession in which people have to pay down their debts regardless of how low interest rates go. And in conditions like this, cutting rates doesn't stimulate the economy like it would have in the past. That means rates might have to go even lower in Australia than anticipated in order to support the economy, which I think will undermine the Aussie dollar in the future. News that Prime Minister Rudd called an election for September 7th doesn't seem to be a major factor in the market. Technically, Aussie dollar remains below both the 20-period moving average and the 200-period moving average, which confirms its bearish trend. On the long-term daily chart, the downtrend is still in effect. I see no significant technical support for Aussie dollar on the weekly chart until the 80, the figure psychological level. This was the low in May of 2010 and would be my medium-term target. Resistance is found at the 90 psychological level. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.